Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 20th, 2025, and we're diving into Darden Restaurants' fiscal 2025 third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Darden Restaurants, known for its diverse portfolio of brands like Olive Garden and Longhorn Steakhouse, has just released its Q3 results. Let's break down the numbers and see how they performed this quarter.
Revenue and profitability overview. Let's start with the top line. Darden Restaurants reported total sales of $3.2 billion for the third quarter, marking a 6.2% increase compared to the same period last year. John, what are the key drivers behind this growth?
The growth was primarily driven by a blended same-restaurant sales increase of 0.7% and the acquisition of 103 Chuy's restaurants, along with 40 net new restaurant openings. This expansion strategy has clearly paid off, contributing significantly to their top-line growth.
And what about profitability? How did they fare in terms of earnings per share?
Darden reported an adjusted diluted net earnings per share of $2.80, which is a 6.9% increase from last year. This figure excludes 0.06 cents of transaction and integration costs related to Chuy's acquisition. It's a solid performance, especially considering the challenging economic environment.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did Darden's different brands perform this quarter?
Olive Garden, their flagship brand, reported sales of $1.33 billion, while Longhorn Steakhouse saw sales of $768.1 million. Fine dining and other business segments also showed strong numbers, with sales of $385.3 million and $674.3 million, respectively. Each segment contributed to the overall growth, with Longhorn Steakhouse leading in same-restaurant sales growth at 2.6%.
It seems like their strategic initiatives are paying off. What can you tell us about their future plans?
Darden plans to open 50 to 55 new restaurants this fiscal year, with a focus on expanding their existing brands. They are also investing in capital spending of approximately $650 million, which indicates a strong commitment to growth and enhancing their operational capabilities.
EPS forecast and analyst expectations. Now, let's talk about the earnings per share forecast. Analysts were expecting an EPS of $2.81 based on a survey of 13 analysts. How did Darden's actual performance compare?
Darden reported an adjusted EPS of $2.80, which is just shy of the forecast by 0.01 cents. While they narrowly missed the analysts' expectations, the overall growth in EPS by 6.9% is still commendable, reflecting their strong operational performance and cost management.
It's interesting to see how close they were to the forecast. What does this mean for investors?
For investors, this slight miss might not be a major concern given the overall positive growth trajectory and strategic initiatives in place. The company's ability to maintain profitability and expand its operations is a positive sign for long-term investors.
Dividend and share repurchase program. Let's shift our focus to shareholder returns. Darden declared a quarterly cash dividend of $1.40 per share. What does this indicate about their financial health?
The declaration of a $1.40 dividend per share, payable on May 1, 2025, underscores Darden's commitment to returning value to shareholders. It reflects their confidence in the company's cash flow and financial stability.
And what about their share repurchase program?
During the quarter, Darden repurchased approximately $53 million worth of its common stock. They still have $548 million remaining under their current $1 billion repurchase authorization, which provides them with flexibility to continue enhancing shareholder value through buybacks.
Operational efficiencies and future outlook. John, let's discuss Darden's operational efficiencies and their outlook for the rest of fiscal 2025. What are the key highlights?
Darden is projecting total sales of approximately $12.1 billion for the full year, with same restaurant sales growth of about 1.5%. They are also planning to open 50 to 55 new restaurants, which aligns with their growth strategy. Additionally, they expect total inflation to be around 2.5% and an effective tax rate of 12.5%.
And what about their earnings guidance?
They have provided an adjusted diluted net earnings per share guidance of $9.45 to $9.52 for fiscal 2025, excluding certain transaction and integration costs. This guidance reflects their confidence in achieving profitable growth despite the challenging economic environment.
Key takeaways. In summary, Darden Restaurants has delivered a solid performance in the third quarter of fiscal 2025, with strong sales growth and a commitment to shareholder returns. John, any final thoughts on their investment prospects?
Darden's strategic initiatives, robust brand portfolio, and focus on operational efficiencies position them well for future growth. While they narrowly missed the EPS forecast, their overall performance and guidance suggest a positive outlook for investors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Darden's performance in the comments below. Until next time.